Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to talk about, as we see August finally coming to an end and September approaching tomorrow, the dangers the market may face next month. Plus, a couple of other little developments, especially with the euro, and obviously a little chat about sterling, which is something which is happening next week. But before I get into all of that, don't forget, these little programs or these little videos are for educational purposes only, and in no way whatsoever should it be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So yes, we're finally seeing today's the very last day of August, and what a month August has been, especially on the tail end of it, certainly since Friday. Anyway, but we're about to welcome September. Okay, we're about to welcome September, and September usually is a very bad month for stocks. In fact, the S&P 500 on average has lost at least 1% in September since 1928. Since 1928. And the Dow Jones average has lost, again, also around 1% in September, dating back to 1896. So this month, with everything going on, especially how we're closing August out, this month could get extremely, extremely ugly. Don't forget, ever since Friday, ever since Jay Powell's speech at Jackson Hole, where he's underlined his total commitment, or the Fed's total commitment, on bringing inflation down to 2%, the markets has really basically been facing carnage. Like I say, the Dow Jones the S&P 500 closed 3% lower on Friday on the back of Jay Powell's speech. Okay, and so did the NASDAQ, same about 3.4%. The NASDAQ closed on Friday. And we've had pretty much 3 days of pressure on the stocks and dollar strength across the board. So this is just the beginning. Well, this is the end of August, and this is the beginning of September. And we've got a lot of momentum building up in September, because don't forget, it all leads to the 21st of September. This is where the Fed will decide on interest rates. And the market is pretty much pricing in a 75 basic point rate hike on the 21st of September. Okay. In fact, it's about 70% on the Fed watch tool predict there's 70% chance of a 75 basic point rate hike. And that would be the third consecutive 75 basic point rate hike the Fed has done. So there is a lot of that. And don't forget, up until the 21st, we have so much other data to come, which could really drive the market downwards. Okay, first of all, we've got the job data coming out on Friday, the NFP, obviously US unemployment. We had some pretty positive job data yesterday for the US of that job openings, which are new jobs available, which was higher than anticipated. So the job market is pretty stable. And like I say, if we are going to get positive job data, then the market is going to be underlining the fact that the Fed is going to keep to their commitment of attacking high inflation. As well as that, we have also got, before the 21st, US CPI coming up as well. So, this month could get pretty ugly for the stock market. It really, really could, especially as, like I say, there is still chat and recession concerns as well. So this month could get extremely, or September could get, because we're not quite there yet. It's still the 31st of August. So September could still get extremely, extremely ugly indeed. Euro stuff. Let's go on to the euro a little bit, okay? Because there's an interesting fact by Credit Suisse. The euro is currently hovering just above parity. And it's been supported mainly down to instead of not just the Fed, mainly being supported because there's expectation for the ECB will increase interest rates by 75 basic points, and there's some positive for a change, EU energy developments. Again, this is given support for the single currency. I mean, for example, their inventories, they seem to be doing quite well with their storage. they are, building up their supply for winter. So that's been quite encouraging. However, like myself, I'm still a euro bear. Okay, like myself, Credit Suisse has still said they are still sticking to their expectation for the euro dollar to fall to 0.9700 in Q3. And this is what they had to say about that. They say and I quote them, okay, we acknowledge that if the ECB is serious about a 75 basic point rate hike, and if the EU is serious about resolving energy difficulties, don't forget the EU have an emergency meeting as well to sort out, get a grip of the energy market. And like I've already said, they're doing quite well. We're building up their supply for winter. So that's quite encouraging. They have said, though, if those two reasons, like I said, those two key reasons to be bearish become undermined. So that's their main reason for being bearish on the euro. And that's one of my main reasons as well, is the gas crisis, because I think it's going to get worse. Still, this is what they say. Still, what doesn't change is the terms of trade impact of still high gas prices on the euro area, or the risk of further gas cuts. That's the thing. Further gas cuts. Don't forget, Nord Stream 1, which is the main line supplying Germany and Europe, closes down today for 3-day maintenance. 3-day maintenance again. Now, last time it was closed for 10 days, the market was spooked whether or not it came back on again. It did come back on. However, the supply it was doing 40% before it closed down. It then got reduced to 20%. Now, will it come on again in 3 days' time? And will it still be 20%? Will it be even less? So that's another major thing. The other thing they've also picked up on, which I also think is something which the market's not considering a lot at the moment, and that is the risk. I'll quote them again. The risk of more risk-averse euro pricing in the aftermath of the 25th of September Italian election. And that's a good thing. I mean, we talked about that, back in July when that happened, when Mario Draghi resigned and his government collapsed. But there's a new election on the 25th of September, and there is quite a lot of concern that the right-wing element will win this election. Now, don't forget, Italy is the biggest receiver of funds from the EU to support for the COVID support fund. And they get quite a lot of money from the EU, billions, to support their economy. But they have to do certain things or match certain requests done by the EU to receive this cash. Now, the concern is this right-wing government, as in the past, has been very anti-EU. So if they get in, then these negotiations for Italy to receive further support may be in jeopardy. So yeah, this could be another major thing which could weigh on the euro. But really, up next today is what the market's focusing on. And I think this is why we're giving it, the euro's got a tiny weeny bit of a boost today, is obviously the EU CPI due at 9 a.m. UTC. Expectation is for it to come in at a new record high of 9%. The previous reading was 8.9%. Now, don't forget, yesterday I mentioned how 5 banks, Deutsche Bank, Danske Bank, which were Société Générale, just to name 3 of them, I'm trying to remember all 5. All 5 banks, they predicted that this reading will come in between 9 to 10%. 9 to 10%. So this reading, if it comes in like 9 or higher, this would really cement the expectation of a 75 basic point rate hike by the ECB on the 8th of September, which might be able to give the euro a little bit more of a boost today. So really, like I said, we need to keep an eye on this due at 9 a.m. UTC. On other news, the British pound, the cable, British pound US dollar, I was talking about that yesterday. It registered its lowest daily close yesterday since March 2020 at 1.1655. Okay, and I talked a little bit more about this yesterday, but I think there's a major event coming up, and I think it could be key. We haven't talked an awful lot about it. We mentioned it little bits and pieces about it in the past. But we haven't really spoke a lot about it, and that is, of course, the 5th of September. And that's why I say, remember the 5th of September, because on this date we will find out who will be the new Prime Minister of the United Kingdom. And all expectation is for this Truss lady to become the PM. And she has some pretty not well thought of ideas on how to support the UK economy. So the market is getting very, very concerned will start getting very concerned about this. And I really, truly think this is going to start putting more pressure on the sterling. Again, I'm a bear on the sterling. I find it difficult to be bullish on the cable at the moment. But anyway, let's have a quick look at the market as it stands and see how it's doing. Let's start with the euro. As I said, look, the euro is got a bit of a boost. It's trading slightly above parity, only really by 17 pips, so not dramatic. It's currently trading at 1.00174. Over that key level, if you looked, it came down and tested it again, and it managed to retrace back from it. That key level really, which is holding for now, 1.00027. Like I say, I'd be keeping a very close eye on this 9 a.m. UTC to see what the reaction will be following the EU CPI reading. So I'm going to find that incredibly interesting. The sterling, like I say, the sterling again, it's managed to bounce off slightly off those lows where it hit yesterday, but still very much under pressure. There's not a lot of good news, I think, for the sterling. This is why I'm still pretty bearish on it. Currently trading at 1.1649. Like I say, it was Goldman Sachs yesterday. They're sort of saying if the UK can't get atop of the gas crisis, then they see expectation. They are expecting inflation to go as high as 22.4%, which is mind-bogglingly scary. So that sterling's still slightly under pressure. Let's say gold as well. Gold is now under that level which was supporting it for a while, $1,727, currently trading out $1,719.27. So yeah, dollar strength still putting an awful lot of pressure on it, and more worryingly as well. This is what I'm saying. September could get even worse, but not even there yet. The S&P 500 is trading under 4,000 points currently trading at 3,993 points and 0.9. So yes, again, like I say, we are still carrying on the sort of momentum of risk-off appetite, like I say. But I think the real attention is going to be on the euro. Like I say, to see if that CPI comes in between 9 to 10%, like those 5 banks are predicting, and see if this will cement the 75 basic point rate hike which the market is expecting the ECB to do on the 8th of September. Other key events happening this week, as well as the EU CPI, German retail sales, US ISM manufacturing, US NFP, and US unemployment. Like I said, I think the job market is key this week, other than the EU CPI. I think the job market's key because obviously it is pretty robust at the moment, and it keeps being robust. It obviously will give the impression to the market that the Fed will carry on with its mission of reducing or getting inflation down to 2%. I even think even if it comes in soft or softer, I don't think it's going to stop or deter the Fed at all, because they've even said themselves they're all right to have a softer labor market, because I think the job data is going to be key. Okay, I will be doing a watch along of the NFP on Friday at 12:20 p.m. UTC. Usually go on 10 minutes beforehand. It comes out at 12:30. I'll go in 10 minutes beforehand, so we can have a little chat about it, and we go through several scenarios, what could happen on the announcement. So please come and join me for that. As the market currently stands, the FTSE is currently trading negative 0.13%, DAX currently trading negative 0.23%, and Euro Stock 50 currently trading slightly higher, 0.25%. So yeah, today, EU CPI, that's a major factor. Like I say, the euro has got a bit of a boost, unlike the cable, unlike obviously the S&P, which is now under 4,000 points. So yeah, that's going to be the big one for today. Don't forget, you can ask me questions anytime you wish. Oh, hey, hello to you too. Hope you are well. Hope you're good. Yeah, don't forget, you can ask me questions or simply say, hey, if you want, or share me your opinions. What do you think? What do you think of Credit Suisse thinking that the euro could go down to 0.97? Don't forget there's been lower predictions for the euro. What do you think? Like I say, if ECB starts raising interest rates aggressively, and the fact that they can get a grip of the energy crisis, will the euro bounce back? Will it bounce back? And like I say, it's getting boosted a little bit now, but show me your opinion. Let me know what you think. Or ask me questions. You always can. This is a live broadcast after all, and live does mean live. My throat gets so dry all the time. I do apologize. Yeah, okay. Don't forget, if you think of a question later, oh, got a question. Does that, you're talking about that lady, I've forgotten her name now, from Rabobank. Very good currency strategist. Yes, she's still predicting to, no, I can't remember the young lady's name as well, actually. I'm trying to remember off the top of my head. But she's the main currency strategist for Rabobank. And yes, she still holds to her prediction of 0.95. I'm still bearish on the euro in the medium to long term as well. So yeah, I know I can't remember her name then. I can't remember her name though. Very intelligent lady, but she still stands to 0.95. Like I say, Credit Suisse is holding to their guns of 0.97. ING, I still believe they are still holding their predictions of 0.98, which I can see certainly potentially that level coming into view at some point as well. So in general, people are still pretty bearish on the euro in the long to medium term. So like I say, I think it's all about the energy crisis. I still think it's going to get worse before it gets better. You know, so I know they're being proactive with it, with storage and with trying to get their hands, you know, try and get the grip on pricing. But you know, with inflation the way it is as well, you know, and in fact, the ECB has been pretty slow to react. One of the slowest, the big banks. I can still see the euro coming under a lot of strain. Mainly also down to the fact that we're going to have a strong dollar. Because let's face it, the US, the Fed has been slightly more aggressive. They've been a little bit slow initially, but they've been more aggressive. The US still has a very strong labor market at the moment. So that's going to go in its favor. We are going to still see a pretty strong dollar unless they do something to try and weaken it. Anyway, if there is any other questions, please feel free to ask away. Like I say, if you think of a question later, put it in the comments on either Facebook and YouTube. I will see them and I will reply to them next time I go online. Another question: can I ask how oil is doing? Also, your favorite gold? Nobody knows it. Gold is my favorite. Yes, of course I can. Actually, everybody knows gold is my favorite because I always talk about it. Oil, okay. Again, actually, oil is slightly under pressure because, again, the worries of demand waning. It did get a boost a little while back. As you can see, this is where it is at the moment. Currently, $90.52. It got a boost because obviously OPEC threatened to cut supply to keep prices stable if Iran came back into, or Iran was again allowed to start, you know, supplying oil to the globe. But since then, I think it's got to come under pressure as demand is beginning to weigh. You know, there is concerns of recession again, weighing heavy on oil. So that's why it's trading at $90 at the moment. Gold, again, like I say, is really suffering from dollar strength and the threat of higher interest rates. Okay, because don't forget, with higher interest rates, obviously people move their money into other assets where they can actually benefit from high interest rates. Gold doesn't have an interest rate. It's a tangible commodity. So that's why it's under pressure as well. Really, the next key level, let's have a look, see if we can see the next key one. For me, is going to be 1710, $1,710. After that, $1,700 will be in the psychological level. So yeah, that's going to be the next key area for me. See if that can hold. But at the moment, it is under a lot of pressure. So I'm wondering, yeah, that's it. So that's what's happening with gold at the moment as well. Dollar strength and obviously oil suffering because of concerns of demand. So yeah, no, my pleasure. Absolute pleasure. Thank you for asking the question. It was a good question. Okie dokie. As I mentioned, if you think of a question later, don't forget you can put it in the comments section on either Facebook and YouTube. I will see them and I will answer it next time I go live on air, which of course will be later this afternoon, which will be at 2 p.m. UTC, where we'll discuss the US Open. I'm also going to have a look at Snap as well, you know, Snapchat, because they're laying off 20% of their workforce today, which is about 1,000 workers starting today. So let's have a look, see how Snap reacts on the Open today. So that'll be interesting to look at. And obviously the aftermath of the EU CPI reading. Will it be 9 or will it be 10%? Or will it be in between, which will be a big thing. Okay, if there is no other questions, not to worry. If you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, by all means, subscribe if you like. hit the notification button so you know next time I'm going live. If you enjoyed this video and you found it interesting and you put up with me, my over-the-top enthusiasm for the markets, which I simply just cannot help, give me one of those. It's nice to know that you like what I do. And I can always see I've already got a couple of likes, which I really, really, really appreciate. Anyway, big shout out to SMF790 for asking very interesting questions and interacting. And a big shout out to all of you. Thank you so much for coming to watch me. I really appreciate when you come along and watch these little videos. I make them for you, so I really appreciate it. I really do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.